Welcome to Short View Trends, your morning market hit for Monday, 18th of October. What matters today and this week for traders? Well, what a week that was for the S&P 500 last week. 3 days of good gains at the back end of the week, particularly Thursday, Friday, up 1.7% and 0.7% respectively. And with that, the S&P's broken through some key technical resistance levels. So it's now trading above its 50-day moving average, which is at 44.31, as you can see on the chart in front of you now. It's also broken through its key Fibonacci resistance level of 44.32. That's the golden ratio resistance level, the 61.8% retracement level, and showing the retracement of the losses from the early September highs through to the early October lows. That's a key level that Markit's also broken through, added to which, of course, the support that was found in early October looks increasingly convincing now on the chart. But the key question is, where do we go from here? Has the risk appetite regime switched? Is it now risk on again? And have we left the risk off behind us? Or are we in the midst of a 5 or 3 wave pullback? And of course, if we are back in risk on, should we ignore all the recent sell signals from our short-term market timing models? Indeed, given the strength over the last couple of weeks, a lot of these models, the 1 to 2 week market timing models to time those 1 to 2 week moves in markets, many of them are back on sell. You can see in front of you now the short-term technical scoring system, clear sell signal once again. Equally, if you looked at sectors, you'd see across the range of 24 S&P 500 sectors, they're overbought. And the same comments can be made about single stocks. So technically the market's overcooked in the near term. Equally, if you look at our risk appetite models, greed is back and fear has ebbed into the near past. So we're left with a key question. Should we chase this market after such a good run and with a number of models, short-term market timing models back on sell? Or should we stand back? Or indeed, should we anticipate this market rolling over and continuing a 3 and 5 wave pullback? All of these questions we address in the Daily Rag today. It's available to subscribers on the website. Or if you're interested in a free trial, please click on the link below and sign up for a 7-day free trial. All you need to do is enter your name and email address, no credit card details required, and we'll send you the Daily Rag for free for 7 trading sessions. So what are we watching today and this week? Well, US third quarter earnings continue in earnest. Last week was the first main week with the banks reporting, lots of the large banks. This week it's a whole mixture of companies, including the likes of American Express, Honeywell, Intel, Tesla, Netflix, and Procter & Gamble. Elsewhere, there's a lot of housing data out of the States, NAHB Home Builders Index, existing home sales, starts and permits later this week. And then on the international side, we've got flash PMIs at the back end of this week. First take on activity in the middle of the month of October for how October's looking across Europe and the West and parts of the Asian economies. Added to which, we've also got South Korean exports and imports. The first 20 days of the month, first take on global trade in October. So that's it from us. That's your morning market hit for Monday, 18th of October. Thank you for listening. Please do subscribe to these free videos on YouTube. Simply search under Short View Trading and click on the subscribe button, or follow us on LinkedIn, Twitter, and/or Facebook. Thank you for listening. Stay safe. Trade well.